What's up, traders? I want to talk about Bitcoin and an opportunity in Bitcoin that you're going to hear nowhere else because nobody talks about this. But I've been talking about it for years. And it was brought back to my attention by someone making a comment on a very old post of mine from 2018, January 9th, 2018, 3 long years ago. I talked about something that may at first glance appear complicated, but when you think about it, it's really not. It's just basically subtraction. What I'm talking about is called a cash and carry trade. Now, in futures, it's more common because the idea is that you would buy the future or sell the future of a certain product and then take another futures contract at a later date. And the difference between the two, you just basically subtract, is what you would make as profit. But in the Bitcoin space, doing something like this actually gives you one additional opportunity. And that opportunity is to lock in your gains and create essentially a stable coin out of Bitcoin. This is Bitcoin right here on the left. And I'm using the FTX exchange. As a disclaimer, I don't use the FTX exchange, but it is recommended by a lot of my trader friends. They trust it. And, well, anything in the Bitcoin space, you have to be the securer of your own funds. So trade there at your own risk. The reason I'm talking about it is because after BitMEX closed its doors to a lot of trading and lost a lot of volume, this exchange has actually taken over for having these futures products. So right now, the standard Bitcoin price is about $52,000. But if we look over here, and this is the key, here are the Bitcoin December 2021 futures. These are a different contract. They're a derivative product. They're trading at about $64,000. Now, you may ask yourself, why would someone be willing to pay $64,000 for Bitcoin? Well, this is a speculative vehicle. In other words, this is forward-looking what people are thinking that Bitcoin is going to be worth at the end of the year. So when Bitcoin is in a big bullish cycle, you have this spread, this difference. And it can get very, very large depending on how bullish everyone is and how far out the spread goes. Now, I'm going to link these that I've talked about before, but back in 2018, when Bitcoin reached its last all-time high of about 19,000, around a little bit before 19,000, I was able to put on a hedge because I saw that there was about an 18% difference between the futures contracts and the spot price. Now, you don't do this trade with leverage. You do it one-to-one. And ideally, what you want to see is that spread come back to zero. It will come back to zero eventually, despite how far away it is. It's just the nature of the products. Eventually, the arbitrage will go away as time approaches and some of the bullishness evaporates out. The last time I really evaluated this was when we had a bullish run back in February of 2020, where Bitcoin was at about 10,000 and some change, and the futures contracts were about a 5% difference, which is small compared to today's standards, but it was still a big difference. I go into more detail here, and you can read this. It'll be linked below. But basically, if you felt that Bitcoin was getting a little toppy, if you were really happy with the profits that you had, what you could do is take the exact same value of Bitcoin that you had and then open up an equivalent short contract position. If you held that, no matter what happens, if Bitcoin goes up, you make money on your Bitcoin, but you lose money on your short. If Bitcoin goes down, you lose money on your Bitcoin, but you make money on your short. So you basically created a zero delta situation. In other words, any movement of Bitcoin is equivalent to zero to you because of the way that you've hedged your position. But because you sold the futures at a premium, as that premium reverts back to zero, or in this case, if you have a big sell off, it comes down to less than zero, you can capture that value. And the whole time you have the trade on, you've locked in whatever price you have on Bitcoin. So essentially, at a base level, by doing something like this at this point in time, by selling a future that's trading at a premium to the equivalent value of Bitcoin that you have locked in $52,000 Bitcoin as long as you keep the trade on. And then over time, as it reverts, you'll be able to capture that difference. So let's go through how to visualize this and see what the differences are, because this is going to be key. And this is what I went through in some of my other videos, but I'm going to show you how to do this in Tradingview. So let's take a look here. Let's start here. And we're going to set our exchange to FTX. We only see these. And let's start with the BTC USD perpetual futures. Now, these are going to be very, very close to spot price. And these are not what you're actually going to use, but we're going to use them for comparison. So what we want to do is we want to do some math. We want to subtract the futures contract, and there's going to be several of them. Let's actually look at the list here. So if you go through here, you can see their BTC 0924. That's the September 2021 futures. Look for these numbers. There's here we go. The March, the December, and the June, basically every 3 months. It's real simple because it's got the date here. BitMEX used to use the old futures letters, which nobody memorizes. So let's look at the closest futures. 0326. And then we're going to subtract that from BTC perp. All right, we're not done yet. Use parentheses, order of operations. To get a percentage, we want to divide this by the BTC perp. And then to make it all nice so we can understand it, we're going to times it by 100. That's going to give us our position. And that little math equation is going to give us a visualization of the arbitrage difference. And so you can see it goes up and down. This is on a daily basis. So there's actually opportunity within this spread. But that is something that a more advanced trader can figure out. We're going to keep things simple. Notice how we had a big dip right here where the premium was only 2%. That was on the 27th. Why did that happen? Well, if we look, let's bring it back to see what happened on the 27th. Well, on the 27th of January is where we had that big dip, right before the Elon pump. But you can see how the premium either gets bigger or smaller based on the volatility of Bitcoin. But still, there's a 4.5% difference in just the March futures right now. What about some of the later futures? Well, let's go through here and change. Let's look at, say, the June futures. The June futures are actually trading at about a 9% premium. And so that's more because it's more time. Again, showing the same level of volatility. What about the December futures? Let's go all the way as far as we can to 31. Well, the December futures are trading. This is a little weird that it did this, but the December futures were trading when I started to make this video at about 20%, but they've come down. Well, that's interesting. That's some real time kind of throwing this out of whack. Let's see what's going on there. So on the perpetuals, we're still at 52. And yeah, at the start of making this video, they were up at about 64,000. You guys saw that. Well, that's how quickly these things can change. So in essence, in just making this video live, you've seen how quickly someone could have locked in about a 10% gain in just this much time shorting the futures. But that's not actually the point. The point is to illustrate how in a big bull run like this, people get very, very bullish and they jack up these futures premiums. That presents opportunity. Yeah, see, look at that. The opportunity is still there. The primary goal is for people that want to lock in their gains. They want to lock in the value in worthless fiat of Bitcoin. But the added benefit is that when these revert back to zero, and trust me, they will revert back to zero, just like they did in 2018, you'll be able to close this short having the same US dollar or whatever your currency is, value of Bitcoin that you had at the top, but with an extra bonus from that premium difference. So, not saying that this is the top, and if you put this on, there's a good chance that Bitcoin could go even higher. But you're still going to get that premium difference if you give it enough time to play out. So, I hope that people in this bull run will actually pay attention and listen to this, what I've been telling people about for years and years. Is this going to make you a millionaire off of, a few $100? No, this is not going to YOLO your account. This strategy is for mature investors that are looking to take off some of the risk that is at this point. So, hope you get good value of it and you're able to lock in your gains. We'll see you in the next video.